Hi everyone, my name is Diana and I am from School of Management, University Science Malaysia. In this video, I will explain to you on the flow of cost in the process costing system. In the process costing system, cost, which include raw materials, labor and manufacturing overhead, are assigned to a few sequential processing departments. In this slide, we can see that there are two main processing departments. That's why we have two work in process inventory accounts. The flow of cost information in the process costing system starts with work in process inventory 1, where we include information regarding direct material, direct labor and manufacturing overhead. Once the process is completed in work in process inventory 1, the information of the cost will move to work in process inventory 2. So under work in process inventory 2, we have information regarding work in process inventory 1, direct material, direct labor and manufacturing overhead. Once the process is complete in work in process inventory 2, or we should say department 2, we then move the information into finished goods inventory. So under finished goods inventory, the information is concerned with work in process inventory 2. And once we want to sell the product, the cost information will go into cost of goods sold. Now, let's start with raw materials. Similar to job costing method, the raw materials that were purchased for production will be recorded in the raw material inventory account. So what you do is that you debit raw materials inventory and you credit accounts payable. After that, when you want to use the raw material in production, what you do is that you credit raw material inventory and you debit work in process inventory 1. So this one is for production in department 1. As for department 2, when you want to use the raw material for production, you credit raw material inventory and debit work in process inventory 2. At the end of the financial year, the balance in the raw material inventory account is reflected in the balance sheet under asset. The next one is direct labor. So direct labor costs involved in production will be recorded in the respective work in process inventory accounts. So for department 1, you debit work in process inventory 1 and credit salary payable. For department 2, you debit work in process inventory 2 and credit salary payable. As we know, the recording of manufacturing overhead is a little bit more complicated because we need to record both the actual manufacturing overhead amount as well as the applied manufacturing overhead amount. For actual manufacturing overhead amount, what we do is we debit manufacturing overhead account and credit accounts payable. As for the applied amount, what we do is we credit the manufacturing overhead account and debit the respective work in process inventory account. So for department 1, we debit work in process inventory 1. And for department 2, we debit work in process inventory 2. So the next one is work in process inventory. Work in process inventory consists of goods that are partially completed. In the process costing, where there are more than one work in process inventory account, then we need to see the flow. So once the product or the process has been completed in department 1, you credit work in process inventory 1 and you debit work in process inventory 2. At the end of the financial year, the balance brought forward in the work in process inventory accounts are categorized in the balance sheet as asset. Next is the finished goods and cost of goods sold. Once the goods are completed, they will be sent into the store and identified as finished goods. Here, the recording will be debit finished goods inventory account and credit work in process inventory account. At the end of the financial year, the balance in the finished goods inventory account is reflected in the balance sheet under assets. The cost of goods sold refers to the finished goods value that are being sold to the customers. When sales of goods happen, its cost amount, which is cost of goods sold, is reflected in the income statement. Here, the recording will be as follows. You debit cost of goods sold and you credit finished goods inventory. The balancing amount in the cost of goods sold account would be sent to income statement. Other selling and administrative expenses, those are period cost, are also included in the income statement. Accordingly, then you can compute the profit amount, which is sales minus cost of goods sold. You get your gross margin, and gross margin minus period cost, you get your net operating income. Okay, that's all from me today. See you later in another video. Thank you.